Welcome back. You're tuned in to Buy Now, Sell Now. I'm Ankita Saxena, and we are in the thick of earnings season. And one of the earnings candidates that has posted a strong set of quarter 3 results is Choice International. In fact, they have posted strong multi-year growth trajectory with FY21 to FY25 CAGR of 52% in revenue growth, 70% in EBITDA, and 77% in PAT. Strong set coming in there for Choice International. And now we are joined by the management to weigh in more on the numbers. Arun Poddar, our Group CEO, plus we have Ayush Sharma, who's the finance controller of Choice International, joining us. Hi, good morning to both of you. Thank you so much for joining us. My first question coming to you, Arun, is the fact that your revenue has diversified across broking, there's advisory, there's NBFC and wealth. Which segment do you see as one of the earnings engine for you for the next few years, and why will that be driving your revenues?
So, good morning, Ankita. And certainly, if you see the past track record also, as on date, almost 58% revenue contribute from the broking and distribution, and almost 28% revenue contribute through the advisory. So, in a longer run, if you ask me for next 2 to 3 year timeline, the broking will again work as an anchor product only and will lead this revenue model surely in next 2 to 3 year time also.
Sure. Hi, good morning, gentlemen. This is Kavita also joining in. And Ayush, I'll come to you now. Let's talk about PAT growth. Ayush, PAT growth is running well ahead of revenue growth. Now, just to help us understand how much of this is operating leverage versus one-offs or a mix improvement.
So, Kavita, largely this is operating leverage only. There are no one-offs during this particular quarter specifically. This growth in PAT is driven by the increased client activity in the broking business. So if you see our margin expansion in broking and distribution business segment itself, our margins have expanded by close to 8%. And in advisory as well, our margins are expanded by close to 9%. Both of these places, our fixed costs are not increasing, and the operating costs are also at the stagnant level. Higher the client activity, higher the business we generate in the broking business, this margin is going to further expand, right? If you see, our ADTO has also expanded in the broking business by more than 20% on a QOQ basis and approximately 27% on a YOY basis. This has led to a growth in PAT, which is more than the growth in the revenue. So these are the larger reasons for PAT expansion.
Right. Arun, also tell us, you have your growing client base in the young and tier 2, tier 3 cities. How monetizable is that client base in the next 2 to 3 years?
Sumita, if you see, our major clientele base are situated in majority in the 2 tier cities to 4 tier cities. So in terms of their client, their LTV or long lifetime value is much higher rather than the metro city client and the other clients. So we feel the client will remain or will continue in the same gesture. And over and above, since we have multiple product line also like the wealth distribution and others, so the revenue model will increase. The revenue per client will also increase in next few years, we can say.
Ayush, just to understand the IPP model partnership, that gives you a massive reach. When should investors realistically expect revenue contribution, and what margin profile are you also looking at?
So the IPPB partnership is basically, a collaboration with the two large, the financial services organizations in this country, right? IPPB has a very strong distribution network currently. They have 1.8 lakh post offices, almost 2 lakh postmans, and IPPB itself has 12 crore customers who are utilizing their savings bank account, current account facilities. Now, the job of Choice Wealth is to provide them the complete investment solutions through digital means and through the expansion on their distribution centers as well. So the project is overall for 5 years time. Currently, for the initial 1.5 2 quarters, we will be in the establishment phase where we will be integrating the IT systems. We will be, reaching out to their distribution centers and doing the training of their team. Post that, we will see good traction coming in, and the margins will keep expanding. So currently, as I mentioned, that we have built the platform where the base is ready. Whatever new addition is coming in will largely contribute towards the profit only. So very less operational cost is there going forward. So we will see a large contribution towards the profits from the business coming in from the IPPV contract.
Tentatively, just want to add on this aspect. From Q2 onwards, from next financial year, from Q2 onwards, we can expect some kind of a decent revenue from the India Post Payment Bank also.
Taken, Arun. Also, Arun, your wealth AUM has grown over 3 times. How much came from the acquisition versus organic client traction?
So if you see, we have acquired three large distribution network. So if you ask me about 328% of the growth in terms of AUM, so in our existing the organically growth plan, that is almost 50% growth in terms of our organic businesses, and the others are from the inorganic side only.
All right, with that, it's time up. Thank you so much, Mr. Poddar and Mr. Sharma, for talking to us today about all the numbers. Thank you so much.
Thanks a lot. Thank you very much.
Well, then let's